Yo, guys. Sorry I had some issues before. I hope that everybody's having a good day today. If you're off, I hope you're enjoying your off day. I hope if you got a little vacation time that you get a lot of rest done. I'm going to give us some time, let people kind of gathering. I know I had some issues, so I'm going to let people kind of regroup. I'm going to regroup as well. So I'll be back in about 5 minutes, guys. All right. All right, guys. I hope you guys are having a great day today. I'm going to kick this off. First, I want to say thank you guys for taking the time out to learn some stuff. I really appreciate that you want to learn it from me. As you can see, I'm rocking a hat today from my alma mater. Shouts out to everybody at USF enjoying their holidays as well, graduate and undergrad. All right, so let's get started. As you guys know, I said for last time, I'm going to kind of go through a little PowerPoint. It's just an easier way to kind of keep my thoughts together. Today, we're going to be talking about a little fundamental economic indicators. It's really kind of a touch on what we kind of spoke about last week. If you didn't get a chance to watch that video, make sure you check this out before you check out this one. It'll kind of make a little more sense to you as to why we're doing this. If you look at this first, it's just going to sound like an econ lecture, and you're going to really get bored. So with no further ado, I'm going to hurry up and pull up this. And I don't want to keep you guys too long. I'm going to make this really brief today. All right, so start this go. So today we're going to get into some economic indicators, reports, in the news. Remember, guys, like I said, fundamental analysis is using economic indicators and kind of news reports to kind of gauge what you think will happen in various currency markets. So the first thing we're going to get into is just a list of economic indicators. So an economic indicator, you're going to hear me say this a lot, it's basically a macroeconomic indicator is the long term for it. What they are, they're just important statistics that represent the overall shape and direction of the economy, right? So if you guys, I mean, you don't even have to really study economic indicators to know that unemployment, if you hear that unemployment is 4% and, you know, last year you heard it was 5%, then you can kind of tell that unemployment is decreasing, right? So, I mean, these aren't really things that are super technical. These are relatively instinctual. However, understanding the reports and the ways that the market kind of reacts to them, you got to play around with it, and that takes a little bit of time to get used to as well. So here's some more examples of some economic indicators. You have GDP, or gross domestic product. I'm not going to bore you guys with the economic details, but basically gross domestic product is everything that a country produces, right? So just look at it as like the total value of all the final products within a country and what that country's worth, right? So it's basically like a really broad measure as the overall value of a country. You have inflation, which is represented by CPI. Inflation, you guys all know that it's just the increase in prices. Interest rates are the return that you get for putting your money in the bank. It's also what you guys have to pay on your credit card bills. I'm sure you guys are doing a lot of holiday spending and definitely are seeing those interest rates for sure. Sales reports are actually kind of it's a really segmented part of GDP, basically because sales reports are kind of a reflection of consumption. It basically tells how much people are spending, right? So if you think about what you spend as somebody else's paycheck, right, you can consider why that might be important. And the reason why I say it's a segment of GDP is because consumption is a part of GDP. In fact, it's 70% of America's GDP is consumption. And then you have employment data, which is unemployment as well. So who reports what, right? So all of these are going to be on various places and websites and things like that. So I'm just going to show you guys really briefly who reports what, because that is definitely important, right? So most of the economic indicators you can find on any country and government agencies, right? So you don't necessarily have to do it on America, although today that's what we're going to focus on. We're going to focus on US economic indicators, but you can do this for countries in Europe and Asia, Africa, all over the world. And they don't have to be from government corporate or agencies. They could be from private corporations that, you know, they collect research and they report their findings as well. So the following are a few government economic indicators. So we talked about GDP before. So that's the Bureau of Economic Analysis, or BEA. The CPI, which is inflation, we talked about that. That's BLS, right? The federal funds rate, that is the most basic interest rate that is in the country. I'm not going to really get into what that is, but basically it's the rate that banks charge each other for borrowing money back and forth. Get into Investopedia if you want to know more about that. I'll probably do a bigger lecture on that later for sure. But for now, just understand that the federal funds rate represents the interest rate. And that's controlled by the Federal Reserve, and more specifically, the Federal Open Market Committee. And we'll talk a little bit about that later as well. And you have non-farm payrolls and unemployment, right? So these are all places where you can go and find this information, right? And like I said, all these reports are places that the market looks to make predictions, right? So when you hear things in the news, they're basically reporting on the reports that came out from all of these agencies, right? So you can definitely watch the news. It's definitely a way to be spoon fed some things if you don't want to have to go and look for them yourself, especially if you're crunched on time. I don't personally go and look at every single report that's released. It's not really necessary if you can get it from somewhere else in a relatively more easy fashion. Understand that these are also pretty complex as well. I'm also going to go over these a little bit as well. So the first one that we're going to get into is right here. So this is the Bureau of Labor Statistics, right? So like I said, you can go to the Bureau of Labor Statistics and get all sorts of different things. But the one that we were focusing on is the employment situation, right? So these, it's really, really, really detailed, right? So you can get it, I mean, in a really, 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 really broad spectrum, right? I'm not going to click on all of these, but I'm just going to show you just how detailed they can be, right? You can read through all of this stuff if you want to. It's not really necessary. And I'll show you why you don't necessarily need to come to these different sites all the time just to get the information, all right? So, sorry about that, guys. So the way you can do that is you can use an economic calendar, right? So if you use an economic calendar, it basically kind of crunches all of that information into one source, right? So you can pull up an economic calendar and just jump right to what you want to look at, right? You don't have to guess or pay attention to all these different sites and monitor all these various sites and find out, you know, who's going to release the GDP report, or, you know, what day is the GDP report going to be released. For the most part, though, a lot of these reports are released monthly or quarterly on specific days. So non-farm payrolls is released on the first Friday of every month. So it's really just kind of an easy way to kind of gauge that, but you don't have to. It's really not essential. That's a lot to remember. So like I said, for the cool thing about an economic calendar is that most sources will provide an economic calendar. It also allows you to filter the data as well. You can do that by country, you can do that by date, you can do by importance. Like I said, for importance, you guys are kind of wondering, what do you mean by importance? No, not all indicators are created equal. What I mean by that is the market reacts differently to various indicators, right? So something like new housing starts might not be as big of a deal as if the Fed announces that it's going to increase interest rates next year, which it probably will. But like I said, if any of this stuff is super, super, super confusing, reach out to me, send me an email. You can also go back to last week's video. I posted some sources on where you can find information for economic, business, finance, investing terms and different things that you may hear that don't sound familiar to you. So here's some sources for economic calendars really quick. So I'm going to go to the Bloomberg one just because I like Bloomberg. Like I said, I'm relatively Bloomberg biased, right? As soon as it loads up here, I think it's my internet that's messing up. But anyways, though, so Bloomberg is really cool because it gives you a good economic calendar that is pretty malleable for the most part. And the thing that I really, really like is that if you see something that you have no clue what it's talking about, like State Street Investor Confidence Index, I don't know what that is. So you can click it, and it's pretty cool, is because it tells you the definition and it tells you why investors care, right? So you have to remember that all of this information you have to make relevant to you, right? You can learn a million things, but if you don't make them relevant to you, you're pretty much learning it for no reason, right? So you can read through all of these reports. It's really great. I'm going to go back really quick because there's one right here for Daily FX that I really personally like to use because, like I said, you can filter it out, right? So click this little thing right here that says filter, right? So we're going to do America, right? So let's say I want to look at all the American reports that are coming up. I'm going to select America, and then I want to say I only want to look at reports that are going to be of like super high or medium importance, right? So I do that and I hit close. So this will tell me all the reports coming up within the next week that I could look at, right? And just like Bloomberg, you can click on it as well if you don't understand what it is, and it'll give you a definition as to what it is. But I personally recommend going to Investopedia and looking that up, right? So once again, the cool thing is it'll tell you what the previous report was. It'll tell you what the forecast of the report is. And then once the report is released, you'll be able to find an actual. I don't think they have any actuals on here, but you can go back and do that. And once again, this is important because this is what the market is using to make decisions on how a currency is going to do, right? So the forecast is going to be an increase in 0.8% for core logistics and whatever this is may be. So the forecast is going to be, 0.8%. And for this one, it's going to be 6.3%, right? So how you make this determination is you say, okay, the forecast is going to be 6.8%. Whatever you use to determine the fluctuation of the market is going to be a forecast as well. But what you're going to do is you're going to compare that forecast to what actually happened, right? So you're going to say the market, predicted that it's going to be an increase in 6.3%. When the report was released, it was even higher. The market didn't expect that. So we can expect that now prices are going to increase, right? So you could start, hurry up and buy some of the currency that you want or sell it as well, because you can make profit on that. And that's how you use these reports in order to make investment decisions. And like I said, it's really good to know how to do this yourself and how to get into the real nitty gritty. And kind of, like I said, it's really great to find things out yourself. The point of this is not to make you all the next Warren Buffett trading gurus. Is really just to give you guys a source of information so that way you're informed. You know that if you decide to go get a financial investor and they start talking about things that make no sense to you, you now have at least some fundamental sense of understanding of what they're talking about, right? Nobody likes to be misinformed. And why is that? Because you're less likely to kind of incorporate investing into your life if you don't understand it, right? But we all need to invest. Retirement is a great reason as to why we need to invest. And no matter who you are, I hate to break it to you, but at some point your body will become weak and you will not be able to work, and you're going to need money saved for that. So knowing how to go about investing now while you're younger, if you are younger watching this, and if you're older, I hope you definitely have some type of retirement plan set up for sure. Anyways, getting back into it really quick, I'm not going to get too carried away on the personal investing tips. I'll save that for another day. But you can go to marketwatch.com and FX Street as well to get some good indicators. I'm going to close this out since my internet's kind of slowing down really fast. So another place that you can go to get some good information is the BEA as well. Like I said, you can do that by yourself. I'm not going to get too much on this. You can go to the Federal Reserve as well. The Federal Reserve, actually, I did a major report on Bitcoin relating it to different various capital markets within the United States to determine whether Bitcoin was basically correlated with that or not. And I got all of my data from this website. I'm not telling you guys to do something that deep and in depth, but just so you know, there's a lot of information that you can find on the Federal Reserve website. And the Federal Reserve does a really good job at kind of summarizing it up for people that aren't really super familiar with how markets or things like that work as well, right? So now that you guys know who reports what and about the economic calendar and why you should use an economic calendar, we're going to continue on with that. And money speaks money, right? So the things that you should look for in an economic report are primarily any financial institution, which will mostly be the Federal Reserve, report on anything, right? Anytime that Janet Yellen, who is the current chairwoman of the Federal Reserve, anytime that she speaks, everybody around the world pays attention because U.S. markets are really, really, really influential around the world, right? The dollar is considered a safe haven currency for people. What that means is that in times when economic turmoil may be abroad, people will sell their foreign investments and start buying U.S. investments because, like I said, if you remember last week, they're viewed as more stable, right? So the U.S. economy is viewed as relatively stable compared to a lot of even larger economies, as well as the more minor economies as well. So you should definitely pay attention to any time the Federal Reserve decides to give a report on anything. That's pretty much going to be relatively important. They're probably going to be doing their overall state of 2017 coming up as well. That shouldn't have too much of an emphasis on markets. However, it is good to know historically what the economy did for this year, because you can use that to kind of make a decent prediction as to what that does for next year, right? So like I said right here in this bullet, as you can see, when members of the Federal Reserve speak, you guys should listen. I won't talk too much about the Federal Reserve is. People have asked me questions about, what exactly the Federal Reserve is and how it works. I'll do that later. I don't want to make this an economics lecture. This is not going to be relevant to you guys if I just continuously talk about a bunch of econ lectures, right? I could start a completely different show for that if you guys so want to learn, but I highly doubt you do. But anyways, we're carrying on. But what they'll do is they'll usually include some good statistics and data and economic indicators, right? So you can actually go to a Fed report and kind of pull out a lot of the BLS statistics and BEA statistics, because they use a lot of those indicators in their analysis to kind of determine where they should set monetary policy standards in the future, right? So like I said, the Federal Reserve is really, really, really important, right? So the way that the economy looks at that is if you have a strong market, you have a strong economy, and you have a strong value of currency, right? What I mean by strong market is a strong stock market. You should definitely pay attention to the stock market as well. You shouldn't just say, I'm going to only look at economic indicators and I'm only going to look at, the market reports for Forex. I definitely hope that all of you guys have set up a demo Forex account by now. It's definitely a good way, like I said, to get your feet wet, to understand how things work for yourself. But once again, you should also pay attention to the stock market, right? You shouldn't be so closed-minded as to focus yourself on one aspect. You have to kind of get a really broad range of knowledge to make really educated financial decisions. So the goal of this is you guys kind of follow along throughout the weeks. You'll kind of get that on a relatively basic level. So I hope that, like I said, that these provide you with some great information that you guys can use to advance your own learning and your own pockets if you so choose. Right. So once again, strong stock market, right? A strong stock market is going to mean that the economy is probably strong. And if the economy is strong, then the value of the currency is going to be strong as well. Right. So we're coming into a close really quickly, guys. These are some news reports, right? So a lot of people don't understand how to read the news because it's really technical, right? And I understand that it's technical. It took me some time as well to read the news. Everybody has a learning curve, right? But that doesn't mean that you guys should just say, I'm not going to read the news because I don't understand it, or I'm going to wait until somebody kind of tells me what I want to hear on a more simplistic level, right? So what I did for you guys here is I highlighted some key terms. And that's one thing that you guys should do as you go through news reports. What I would recommend is as you read the news, pull up the Investopedia webpage as well. And every time that you see a word that doesn't make sense, throw it into Investopedia, read that definition, read how the definition applies, and then kind of apply that back to the news and continue on from there. So reading on from here, I'm just going to kind of briefly go over it. The dollar advanced and U.S. equities are mixed. So basically, U.S. equities is a stock market. So the dollar advanced and U.S. equities were mixed with the last trading session before Christmas, while Bitcoin plunged at the close of the tumultuous week for cryptocurrencies, right? What this is saying is the dollar appreciated because U.S. stock market appreciated. However, Bitcoin kind of fell off, right? It's a conglomerate of information in one paragraph, right? With volume running about 25% below average. Volume is the amount of trading, right? So if on one day, 1 million people trade, and then the next day, 500,000 people trade, volume decreased in one day by 50%, right? So volume is just the amount of trading going on, right? So with volume running about 25% below average, the S&P index is an index composed of 500 major companies within the U.S. that are considered blue chip. They're major corporations. People use this index, like I said, as a way of gauging the overall economy, right? So you can't just look at one stock and say, oh, Microsoft's doing good, that means America's doing great. No, it's not necessarily the case, right? And I'm pretty sure that I'm preaching to the choir. This is not really technical information. This is, like I said, it's relatively instinctual. But what the S&P does is it collects a lot of the stocks together and it kind of gives it a score, right? And that score is in an index score. So that's a way, like I said, to kind of gauge the economy, right? So reading on, the S&P index was little changed as declines in consumer healthcare, financial stocks were countered by real estate and energy. So like I said, the S&P is a conglomerate of different stocks, right? So you have financial stocks, real estate, and energy, right? And there's a lot more stocks in there. There's retail stocks, all types of different stocks, bank stocks, so on and so forth, right? Bitcoin slumped into the fourth day with digital currency and during its worst week, blah, 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 right? Reports showed U.S. consumer spending. Remember, I told you guys that consumption is a big part of GDP, which is a reflection of the economy, right? Think about it. Think about it like this. If the economy is doing bad, like it was doing back in the most recent financial crisis, you're not going to spend money. You're going to try to save money, right? So you could kind of say, well, if people are spending less money, then that means that the economy is kind of slowing down because they're fearful that they're going to have to save their money, right? They're only going to buy what they need, right? Versus before the financial crisis where people were spending money frivolously, you know, you can say that the economy is good. People are spending money. People see that the economy and they think that the economy is doing well. So that's why consumption is a really important indicator, right? It's not just to talk about just related to stocks and how much, you know, Walmart and Target can boost their profits because people are spending more. This relates to the overall strength of the economy as well, right? So consumer spending rose more than forecast in November and inflation, right? So once again, the dollar advanced because reports showed that in November, right, the reports were lower than were higher than what the market expected, right? So the market said, we believe that the economy is, you know, at 0.1 and it really came out, you know, 0.4. So it has 3 points to grow. That definition probably makes, you know, no real technical sense, but I hope you get it, what it means figuratively. All right. And inflation gauge advances and signs of economic vitality that should keep the Federal Reserve on track. So remember, we talked about the Federal Reserve already as well. Although Treasuries stabilized, Treasuries are just bonds. We'll talk about bonds much further down the line. I'll set aside a whole couple series to bonds as well and to kind of tell you guys as to why bonds are important, why bonds matter in the economy, and kind of the functionality behind bonds as well. But although Treasury stabilized, they're set for the biggest week loss in September as investors contemplate prospects for continued growth and reduced central bank stimulus. What this means is that the Federal Reserve is no longer going to hold down in interest rates, right? So the Federal Reserve is expected to increase in interest rates. And if you guys remember last week, I told you guys that interest rates really play a big component in determining the value of a currency. And if you remember that carry trade example as well, you can kind of get a real world example as to how that applies, right? So basically, what this paragraph is saying is that forecast came out that showed that the U.S. economy was doing better than what the market anticipated. The price of treasuries decreased because interest rates are going to increase due to the fact that the Federal Reserve is going to increase interest rates as well, right? So like I said, you guys have to use the news as well as to make these decisions because it kind of tells you what people are thinking, and you use this right here to kind of get determination from the past as to how the future might play out, right? Going into another one, by the way, that one was from Bloomberg. I copied the links down below if you guys want to go back to those reports yourself. So this one is gold prices. I didn't really talk about it last week, but you can also buy gold on the Forex market as well. That works in an exchange rate per ounce compared to the US dollar that fluctuates all the time. So just like currencies, gold is a metric as well that you can use an exchange rate. So gold prices were little changed on Thursday. Also one thing to keep in mind, gold and the dollar have an inverse correlation. What does that mean? It means that as the price of gold increases, the value of the dollar decreases and vice versa. Okay, so that's one way that you can use one metric to get a determination of the other, right? So gold prices were a little changed on Thursday with a small bounce after an unexpected downgrade of third quarter US GDP. I highlighted that because we talked about that, right? Data failing breach familiar ranges as expected. Once again, like I said, guys, that the data that comes out is oftentimes anticipated before the data is even released, right? So the market will actually start kind of using their expected anticipations to make current decisions, right? So you can't just say, oh, the report's going to be released on Friday. I'll check it, Thursday night to see what happens. And then, Friday afternoon too. No, you guys kind of got to really look at things and kind of get a good gauge of what people are thinking, right? The Fed's favored PCE inflation gauge is next set up ahead with core price inflation growth expected to hit a 5-month high at 1.5%, right? PCE inflation is the Fed's way of measuring inflation, right? And PCE inflation stands for personal consumption expenditure, right? So the first inflation that we talked about from the BLS website is CPI inflation. It stands for Consumer Price Index, right? It's really the same thing. It's just the Fed's way of doing it, and it's a much more broad spectrum, right? So CPI, just to give you a quick brief about what CPI is, what they do is they take all the goods that they think consumers buy on a general spectrum, right? I mean, eggs, bread, toilet paper, clothes, tires, oil, not usually oil. They leave that off energy, but all these different things. And they measure the price, right? And they take the price and they say, all right, here's the price. And we're going to talk about it in value relative to a year, right? So the CPI data, if I'm not mistaken, is set in 1983 or 86, right? So they say the value of the price of a basket of goods, they call it a basket of goods. The value of a price of all these goods or basket of goods in 1986 relative to the value of that today is what, right? So that basically just tells you guys how much prices increase. So that's why inflation is important, right? And that'll also determine purchasing power, which you guys may have heard me talk about last week as well, but I'm not going to get into, right? So once again, this is just a really simple way to say that gold didn't change because of an unexpected decline in the third quarter GDP report, right? The Fed showed that inflation is rising, and in 5 months it'll be 1.5%, right? GDP, the market's revision may be muted within a pre-holiday trade, right? So basically, it's too hard to tell because it's the Christmas season, so we'll determine after Christmas. Here's Federal Reserve and FOMC report, right? I'm not going to get into it. Once again, I keep saying this a lot because I want you guys to go research this information for yourself. Please don't just rely on somebody to give you things. The point of this is to kind of point you guys in the right direction so you can do it yourself. Kind of think of it as to give a fish, teach a fish kind of analogy. But the FOMC is basically it's the Federal Open Market Committee. They're the ones that kind of determine what the economy is doing and make decisions that will directly influence the economy in months or weeks ahead. They're a part of the Federal Reserve. They're a group, they meet every 6 weeks, blah, blah, blah. But they release reports that are a lot more detailed than the news. So if you can get it from the news, that's a really great way to find out what the Fed's doing. They also release reports on their website from the Federal Reserve. You can look at videos from them speaking if you want to listen to them. You don't want to read it. There's all kinds of different ways to find out what the Fed is saying. But once again, I'm going to say this again. Pay attention to the Federal Reserve. You should pay attention to the Federal Reserve anyways because they determine the value of the dollar that you hold in your pocket, right? They determine if your credit card bill is going to be valued at 12% interest or 15% interest, right? They determine a lot within your guys' lives. And you should definitely be informed as to what it is that they're doing. I definitely would like to, and I definitely hope that you guys feel the same way. All right. So getting into this report really quickly, the Federal Reserve has made the following decision to implement the Federal Open Market Policy stance announced by the Federal Open Market Committee and its last amendment, blah, 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 blah. The Board of Governors, which is a part of the FOMC, the Federal Reserve, voted unanimously to maintain the interest rate paid on required and excessive reserve balances at 1.25%, right? Basically saying that the Federal Reserve did not change the interest rate. So you're not going to see an increase in your interest rate on your savings accounts, right? As part of the policy decision, the FOMC, Federal Open Market Committee, voted to authorize and direct the open market desk at the Federal Reserve Bank of New York until instructed otherwise to include transactions in the system open market account in accordance with the following domestic policy directive. Go to this link right here at the bottom if you guys want to find out exactly what that directive is. But basically, all you need to know is that this is a really, really, really broad way of saying the Federal Reserve decided not to change interest rates. You need to know this, though. This is definitely something that will be taken into account and priced in to the currency. That's another thing I want to start doing as well. I want to try to start increasing the technicality of the language that I use and kind of explaining it. So basically, I said that the things will be priced in. Priced in basically means that investors will incorporate that expectation into the price, right? So they'll say it's priced in at, so basically you can say, this report was released and it's expected to do this. So investors are pricing it in at this amount, right? Just a really complicated way to kind of go about speaking, but you should definitely, if you want to speak to people in the financial world, learn how to get the lingo. All right. So that's basically it, guys. I definitely hope that you guys take the time to go ahead and use this information for yourself. Go ahead and set up your Forex demo account if you haven't done so already. I did a quick, brief demo on how to do that last week. You can go to my page and find that video as well. Let me know if you have any questions, guys. I'm definitely available. Type it in the comments box if you have a question. I'll get back to you. If you want to message me directly as well, I'm available. Send me your email. I'll get to you. I understand that you guys are on a holiday and are definitely busy as well. So I'm not going to keep you anymore. I hope that all you guys are safe and happy. I'm not going to get back to you guys until the first Sunday of the new year. So with that, I want to say have a safe holiday and a happy new year. I love all of you. Talk to you later. Peace.